Hey guys, alright, so this video is going to be about the difference or understanding some basic terms that we use. And the two terms I'm going to go over are what you hear to as referred to as traffic and what you hear as referred to as space. So, in the most basic, broad sense, traffic simply means um, consolidation or trouble areas or more problematic. Whereas when we use the word space, we're sort of defining it as less trouble areas in a more open, better area that usually has less trouble areas in it. Now, again, like everything, there's degrees of everything, and you have to, with just experience and time, sort of be able to put the pieces together, and it's not as easy as whatever this 10-minute video might be to explain it. But I really want to get the general concepts out there, just so I had a request to do this video, and I'm sure a bunch of other people would like it as well. So again, I'm just going to start really basic here, and I'm going to start with traffic. So I'm going to go ahead here and draw a box of consolidation. So I think we could all see that this is clearly consolidation. Prices just ranging in between this area here. So when we see a trouble area like this, or price consolidating down or moving sideways, we know that any price action we take within this area is going to have more trouble areas next to it. That's because wherever you look, wherever there's a price bar, just by the nature of price consolidating down in this boxed area, is going to just mean that there's more trouble areas close by. That, if you take, say, a pin bar like this size, well, you're trading right into all these bar highs here, and then there's a bunch of congestion all the way straight down here. So when you hear the term of somebody saying, or if you hear me saying, this is not a bad price action bar, but it's in a lot of traffic here, I'm going to pass on it. That's one way I define it, is just based on this consolidation here. Then if we go to the other topic I want to speak about is space. So when I say space, I really mean what I'm looking to is I look to the left of price, and I try to determine how much space is there. So I'm going to use three examples here of three swing points we have, and then we can work from there, and I think it'll give the best idea of what I mean and what I'm basically looking for. So I'm going to use this pin bar here, I'm going to use this bearish outside bar here, and I'm going to use this pin that is from last week over here. So when we look at each of these bars here, I'm looking at, my eyes first obviously going to be drawn to what the bar is, but then what happens next for me, and where my eye goes, is what's to the left of price. And if we look at this first bar here, we can see this wide open area here. Just a huge wide open area. You could draw lines all over the place here. What this means, it doesn't mean that price has no trouble areas. What it means is that there was less supply and demand areas of consolidation, which is generally a battle between supply and demand, than if you have less space. So this amount of space, just in my mind, is saying to me, well, okay, there's going to be a better chance for trades to move, rather than having trades with a lot of congestion like we have down here. So then if we go to the second bar here, the second one over here, this bearish outside bar, now we look at the space in between this area. So again, nowhere near the space we have here. There's still a good amount of room here, but what this means is this area in here, this little cup it forms in here, well, that amount of space between price over here and price where we are now is less. So that just generally means in my head that this area into here is more likely that price can make it through it. But then as this area closes down, we hit more of these major trouble areas in here. Again, then if we move on to the last example, we can see now we have very, very little space in between here. So when I see that, that's when I say, oh, a trade has a lot of traffic, less traffic, not a lot of traffic. So I sort of look at it in degrees by looking to the left and seeing what price is doing. So a bar like this last one here, simply in my mind, just simply means that even when this breaks, there's just a lot of problem areas you're trading right into. And that doesn't mean it's a bad trade. It doesn't mean it really comes back to you as a trader and recognizing these trouble areas. So again, when we use the term space, traffic, there's different degrees of it. I'm just trying to, with this video, is get across that when I'm looking at prices, certain things my eyes are drawn to, and then you build from there. So just because you see a trade in a lot of space doesn't mean that it's a home run trade. It doesn't mean you can hold it forever. But generally, if you have a really nice bar and there's a lot of space by, it's generally going to work out and has a better chance of getting some legs under it than a trade that's really jammed in there and a lot of traffic and trying to pierce through these areas. So again, it's sort of, there's a lot of ways to look at it. Again, you could look at it as boxes of consolidation and price boxes constantly, and it flips in this way, and these boxes sort of build on top of each other. And again, you can look at it like that also, and when you're in one of these boxes, you're in more traffic, you're in more consolidation, you're in a more sideways market. When you break out of these boxes, price is more in space and has, more places to go, so to speak. And then as you reapproach those boxes, you're reapproaching these trouble areas, or the traffic areas in sideways market. So I hope this video sort of clears up the terminology, so to speak, and sort of gives you an idea of what my eye is drawn to.